Cold brew, which is just incredible for the afternoon day part, by the way, and China, the two big growth drivers for Starbucks. And joining us now, maybe just came back from Japan, Starbucks CEO Kevin Johnson. Kevin, great to see you.
Good morning, guys. How are you?
We are good, and I think that you're doing well. I was surprised you happened to report on a day where the market was bad. I thought your stock should have been up 3. Let's talk about, we were just talking about Alibaba, which we know you have a great relationship, Kevin. China looks like they are far more developed digitally than America, and you have been a star. You are a technology genius from the old days. Talk about how great China was, because a year ago, China, people were doubting it.
Well, you know, we had a very solid quarter, and it really capped off a transformative year for Starbucks. I think we're well positioned. Certainly, China was a big part of that, Jim. And you know, you think about the digital savvy of the Chinese consumer. You know, they adopt and they embrace technology at a very rapid rate. Our China digital partnership with Alibaba really unlocked a wide range of new opportunities for us. We launched Starbucks Delivers in China. Our mobile order for pickup, you know, just those two alone were 10% of our sales mix in China. And, you know, we posted a 5% comp with 2% growth in traffic. So the digital strategy in China is working. 10 million active rewards members, 45% growth in those rewards members. So really a strong performance in China.
Now, in the United States, even not that long ago, the investment community, Kevin, really felt that you couldn't get United States going, talking about like a 4% number. Talk about the 2-year comp, which is what really matters, and how it accelerated and why it accelerated in the United States.
Yeah, well, you know, we posted a 6% comp with 3% growth in traffic this quarter. When you look at the 2-year comp, it accelerated to 10%. So, you know, many were skeptical that we posted a strong 4% comp a year ago, but then we posted a 6 on top of that. Now, the growth at scale agenda we're executing against really is all about focusing on the right things and then executing with discipline. In the U.S., it's all been about elevating the customer experience in our stores, driving beverage innovation, and expanding digital customer relationships. And in all 3 of those dimensions, you know, we've executed with discipline. Beverage innovation. You know, we now have Nitro in all of our stores in the U.S. Our innovation on the cold beverage platforms, especially things like cold brew. You know, we had pumpkin cream cold brew, Nitro, but also our iced macchiato. You know, our cloud macchiato beverage platform, refreshers, shaken teas. So, you know, we've really focused on that beverage innovation that has helped us, and we grew in every day part in the U.S.
Kevin, on the call, you chose to take a bit of time to focus investors on your strategy when it comes to artificial intelligence, something we talk about a lot here, of course, the growth of AI. Give people a sense here in terms of how you see it helping your business, potentially, eventually, I would assume as well, contributing to margin expansion.
Yeah, well, you know, clearly we've been focused on the digital flywheel and how that customer connection is so important. But over this last year, we've really spun up our focus on artificial intelligence around an initiative that we call Deep Brew. And Deep Brew started really by using artificial intelligence for the personalized offers that we make on our mobile app. But now we're using Deep Brew in a wider range of scenarios. For example, Deep Brew is now doing artificial intelligence to really predict how many store partners we ought to have by day part in every one of our stores. By doing that, it is helping us unlock growth because we're staffed to meet customer demand. Deep Brew is now forecasting inventory replenishment by store. And that is helping partners ensure they have all the items they need to serve customers, and they don't have to spend their time doing that inventory and placing those orders. So Deep Brew is actually freeing up partner time so that they can spend more of that time focused on the customer. Basically, Deep Brew is automating those administrative tasks, freeing up our partners to spend more time with customers, and that has led to an all-time high in customer connections. Now, when customer connection scores are at an all-time high, that's growing our traffic. So Deep Brew really is at the center of helping our partners better serve customers, and it is a key fuel for our growth looking forward.
Hey, Kevin, it's Carl. In QSR, breakfast is getting so much attention, either adding to the menu at McDonald's or Wendy's, what have you. I wonder, is there pressure internally to expand food, at least in the morning?
Well, you know, for us, we're a beverage-first company. I mean, we differentiate on the fact that our Starbucks partners handcraft each and every beverage personally for our customers, and then we attach food. And, you know, we saw good growth in all-day parts, and especially in our morning day part. So I think the beverage platform is helping, but part of what's helping in the morning day part is we're able to attach our breakfast sandwiches, the sous vide egg bites, and a wide range of food items that resonate with our customers. So, you know, food plays an important role as an attached to the beverage, and we're seeing good performance in that morning day part.
In a couple of days, Kevin, actually 10, it's Veterans Day. I think that your company is the one that's maybe the most committed to hiring vets. There are also, I think there's a labor shortage in this country. Could you talk about how you can find enough people to staff Starbucks and what you've done to hire people who've come back from the wars?
Well, you know, our focus on veterans and military spouses has been something we've been doing for several years. You know, we set a goal for ourselves to hire 25,000 veterans and military spouses. We surpassed that goal 3 years ahead of schedule. And we now are on a run rate. We hire 5,000 veterans and military spouses every year. And they are phenomenal Starbucks partners, and we're very proud to be associated with our veterans and helping support them, you know, as they come back from oftentimes multiple tours of duty. So that's been an important part of it. And they are fantastic partners, and they make us a better company.
I want to talk for a moment about something that Mark Benioff has taught us, which is that business is the greatest platform for change. You, I think, your company uniquely has been an ambassador to the United States. What's it like being, for the United States, what's it like being an ambassador for the United States to China right now?
You know, Jim, well, we just surpassed 4,100 stores in China. We have 55,000 Starbucks partners who proudly wear the green apron in China. We've been in China for 20 years now. And, you know, for us, it's all been about being in that market, entering that market with respect for the Chinese culture, and doing the right things to, you know, beyond the pursuit of profit. For example, we introduced a healthcare benefit for our partners in China to take care of their aging parents. And that's a one-of-a-kind insurance program that we put together in partnership in China. You know, the whole foundation of Starbucks is built on the fact that we believe that the pursuit of profit is not in conflict with the pursuit of doing good. And, you know, in many ways, our purpose and our reason for being goes far beyond the pursuit of profit. So when we're in China, every one of those stores is a part of a community. And we do work to service that community and be a part of that community, take care of our partners, and show up in a way that really focuses on doing good in every community that we are a part of.
Yeah, Kevin, the reason why I'm going down this path is business is under assault in our country. I've never seen anything like it in my lifetime. And the companies like you are doing things that make me feel that business being under assault is a huge mistake, given the fact that, again, it's a great platform for change. I happened to be in Mexico recently, and, you know, I saw orange aprons, and I said, maybe they're wearing the wrong color. That's not true, right?
Well, that's not true. Yeah, I know you shared a great photograph of you visiting one of our stores in Mexico. And in the month of October, we have a great licensed partner, Alsea, who runs our Starbucks stores throughout Latin America. And Alberto Torrado and his team do a fantastic thing in the month of October. They have a very special cause that they orient to. So, you know, every peso that's spent at Starbucks and their other brands that they run, they donate money to help feed the hungry and take care of children, take care of their communities. And so they put on an orange apron to help amplify the fact that they are focused on serving their communities and contributing money to those communities and the people in need. And so we're proud to be, to be a part of what we do in Mexico and in every community around the world.
Kevin, you know, hopping on to Jim's question, about China and being an ambassador for the U.S. in a way. And we do see pictures in Hong Kong, and we know Hong Kong's a mess. But we see pictures of broken glass at Starbucks storefronts. How should investors view that?
Well, look, obviously we monitor that closely, and I just say that my priority is focusing on the safety and security of our partners. And, certainly, we're in 81 markets around the world, and, we deal with geopolitical issues all the time. But my focus and my priority is really focusing on the safety and security of our partners.
Kevin, one last question. I know we got to go. I'm curious to know what you're seeing about the delivery business. There was a debacle this week where Grubhub was saying this business is maybe, I could argue, say, isn't a business. The fact that their profit margins are so thin, is that a win for Starbucks?
Well, I look at the delivery business. China is a very different market than the U.S. In China, we saw 7% of our total sales volume came from delivery. And in the U.S., it's far less than 1%. And part of that, I think, is there's a very different cost structure in China than there is in the U.S. And, I think that delivery will evolve in the U.S. But right now, I think unless you have a very high ticket, the delivery costs, are prohibitive to the consumer. And so, people are having to invest. Either merchants are going to have to accept lower margins, or delivery companies are going to have to figure out a different business model that enables that price to be a lower price to the consumer. For us, we're pleased with our partnership with Uber Eats, but it's very early days in the U.S., whereas I see, delivery is much more mature in China and is embraced, by the Chinese consumer much more than it is here in the United States.
Kevin, it's really great to talk to you. That's Kevin Johnson, CEO of Starbucks. Good to see you, sir. Thank you very much.